What's happening, everybody? Tarafdar yet back with a brand new video. In today's topic, I want to continue expanding on the credit repair myths, and I want to go ahead and help you bust some of these myths so that you can go ahead and move forward with your personal credit journey. Now, another thing I wanted to talk to you guys about, and the past couple of videos we had, we talked about authorized users, what the future is going to look like. We talked about credit repair. About 80% of your activity should be concentrating on building, establishing, and nurturing existing relationships, or perhaps harvesting new ones. And then today, I want to talk about the price point of credit repair, right? The pricing strategies of how individuals charge, the credit repair businesses out there, what is the realities of what's going on, and give you guys an understanding that, if there are actual magic bullets out there, right? And we talked about also like the fact that a lot of people think that there are softwares out there that you just simply go out there and automatically remove all the negative items from the credit reports just simply because somebody has access to a magic software or some sort of strategy there. Now, this topic, and the reason I wanted to bring this to your attention is because, albeit that there is no specific softwares out there, and albeit there's a lot of credit repair companies out there that are just simply saying, hey, look, if you pay me extra dollars, we're going to expedite your results, and here's what we're going to do, and here's the strategies behind it. I think you need to start to imagine yourself in a situation where you have to kind of go based on a common sense approach, right? And the reality of that is that not all the people out there know exactly what they're doing when it comes to the credit repair space. I've seen a lot of professionals stay into this business simply because they send out outdated documents and templates and then just basically bombard the credit bureaus with documentation. And I've seen other individuals who are trying different tactics in reference to, them trying to bombard the creditors in addition to the credit bureaus, and that is their tactic and that is their mechanism behind the credit repair campaigns. Here's the thing with pricing, right? So a lot of this, like what's happening is, we have to think about this concept is there a one size fits all type of strategy when it comes to credit repair? And the reality is that there really isn't. And the real reason behind that is because every single credit profile, right? There's unique angles in those credit reports, right? And the reason I say that is because you might have, let's say, 12 negative items, whereas another person has 4, and somebody else might have 7. We don't know what the reality is. But if anybody is offering you a one-size-fits-all type of pricing strategy, there is a chance that that is a templated structure. Now, I'm not saying that all one-size-fits-alls are bad. For example, attorneys charge a retainer, and then they case-by-case go in court and win a settlement or something, and you guys split the difference. The idea is, when you're looking at a company that doesn't represent that specific angle of being an attorney or somebody, but gives you a one-size pricing or model, then you have to think about the idea that maybe they are just simply templating something there, right? And the reason I say this is because credit repair companies generally, number one, there's a lot of rules and regulations and laws around that, right? Things at federal and state level. But in addition to those preliminary laws, and the concept of operating within a specified process, pricing wise, if you see that it's a fixed cost, depending on the amount of negative items, and it's just pretty much clearly indicated, it's a templated structure. And templated structures don't necessarily help you win because they're templated, right? It's just designed in a way that's been kind of like a spin-off of old school templates sending off and bombarding the credit bureaus. Sometimes they ask you to pay a little bit extra. And when you're paying a little bit extra, what's happening is you're compromising that and you're essentially just simply bombarding more. Right? They're printing more documents and they're sending to the creditors and the bureaus and so on and so forth. This methodology, albeit sometimes effective, because the credit bureaus don't simply have the time of day to open every single piece of document and just go investigate. For them, it's the resolution, right? It's a question of like efficiency. So what they will do is simply remove the negative item and they'll deal with it when it comes back up. The creditor's prerogative is to ensure that they're reporting regularly on a monthly basis up-to-date, accurate, complete, and timely information. That's the creditor's responsibility. So albeit that temporarily, because of the bombardment of documents and stuff the credit repair company has sent to the bureaus, or perhaps even the creditors, albeit that is the situation, the item can be coming off negative, or that negative item can be coming off on a very temporary basis. If that happens, right? If that happens and the item comes back, 2 to 3 months down the road, if you try to structure that whole campaign again, possibility of that negative item staying is very high because now they've done everything in their power to report it in a systematic way, because obviously the same item came off earlier. On a creditor's perspective, they can say that they're more compliant, and therefore the information that's being reported is a lot more accurate. So that's a possibility, right? And that can happen. And if that be the case, you don't have a fighting chance at that point. The only thing you can do is go through the mechanism of reporting and whether or not compliant protocols will follow during that reporting time frame. So all this to say, right, the reason I'm explaining all these mechanisms and processes with you guys and how things are structured, and on a baseline, you see these type of templates followed. All this to say is, like, if you feel that you're seeing a credit repair company offer you a fixed pricing and a model without asking you the situation of what the negatives are, what your reports look like, without necessarily understanding your particular scenario, and just saying, hey, look, this is the price point we deal with. What are your thoughts on this? And then they stick to that. There's dangers to that. And that's the real danger that we need to be concerned about, because that real danger is a threat in how we do credit repair, right? It's going to harm your ability to do well for yourself. So fixed pricing model doesn't necessarily mean there will be better. And a higher price tag doesn't always mean that there have some proprietary tech or software that connects directly with the credit bureaus. And myth number one, which we talked about in a few videos earlier, which I will link here if you want to check it out, we talked about that there are really no companies out there that can directly connect with the credit bureaus and somehow remove your negative items. Credit repair companies are the worst enemy of credit reporting agencies. So this is one of those things, right? So pricing wise, just to go back to that, if you see that there's a price point that's extremely high, the justification behind it, if there is no level of transparency provided to you in reference to what's done and the complications behind why you got to do it a certain way, then you need not to be concerned about doing business with them. And the reality is that's how it should be, right? So if a credit reporting or credit repair company or an advisory firm that is under the purview of the credit reporting agencies and working to help you fix your personal credit, if they can't provide full transparency in their pricing model, exactly what they do, and you know this information now, and then you basically go out there and you try to solve it, right? You go out there and you explain to them, hey, look, here's a situation. I'm going to go ahead and try to give you my credit reports. What exactly is the strategy here? What are you guys doing? And if they cannot pretty much give you in confidence exactly what their strategy is, how they're pricing, right? What's the mechanism behind their pricing strategy? If they cannot clarify that, then essentially it's not a good deal for you, because even though they can say, hey, they have this and they have that, the reality of the matter is there has to be a clear goal and a strategy that has to be very transparent. If they say they're bombarding, you're spending money on things that may not be working properly. And like I said, if you bombard for the time being the credit bureaus, and the creditors may agree to take it off on a temporary basis, chances are those negative items may come back again. So that's one of those things that I want you guys to be very clear about when it comes to pricing. Now, there are companies out there that will charge you month to month, and that's just another one you want to be careful with. And I think that the reality of that is that even though they charge month to month, like I said, it's a templated strategy again, right? So if you don't see anybody really taking an interest in your financial circumstances when it comes to your personal credit, right? Like, for example, if you approach, some of the people I train in credit repair industry, the people that come to me for my courses and they learn and they walk out, one of the things in my, Insider's Edition, which is my Ultimate Personal Credit Mastery, they have an Insider's Edition version. I teach them about the ethics and how to market, but also the ethics and compliance, right? What are some of the procedures in order to successfully onboard a customer? Now, you may be individuals who are not interested in running a credit repair business. You just simply want to fix your credit, right? But the mechanism is the same. The idea here is, look, have a demonstrated and sheer level of interest built on really identifying the individual's needs. And the reason I say this holistically is because a lot of people who are doing credit repair simply want to onboard clients, check their credit reports, and hash them through a system that's pre-templated and pre-packaged, and cross their fingers and hope for the best, and charge more just simply because they're adding more packages to the mail. Doesn't necessarily mean that it's anything unique. I think the onboarding process, you as a customer, or perhaps you're operating a business, I'm not sure which part you take in, but I think the important thing there is that if you're doing any of that, right, if you're either onboarding or if you're a client seeking credit repair services, I think the most important thing in all of this is understand the financial circumstances that you're in, and to thoroughly and appropriately conduct something called a liquidation analysis. A liquidation analysis studies your financial patterns, right? It shows you exactly what you what you have to work with, what your income is, what your expenses are, and so on and so forth. And you have to have a predetermined goal in mind, right? A lot of people go into credit repair to try to remove the negative items, and this is a myth we spoke about in the last video. It's like, hey, you want to remove the negative items, but you have no interest in sorting out or harvesting new ones to really establish credit at a higher scale. So you have to have a goal in mind, a pretty determined goal, which you say, hey, look, this is my timeline. This is what I want to do. And understanding the framework of credit repair, which is build new relationships, right? And then at the same, try to get rid of those negative items very strategically, the proper way, with full transparency in mind. If you don't have a very clear path there, right? First and foremost, the liquidation analysis helps prepare us to see, well, myself or anybody I train or you as a client, to see what the goal is. If you have enough income set aside or dedicated schedule of cash or surplus funds that you can commit to paying down some of your primary creditors, to working with some of the strategies on enhancing your existing creditors, or perhaps gearing towards a financial deposit to get a secured revolving account that will automatically enhance your credit, right? There's steps there, but there has to be a predetermined goal, like I said. So the pricing strategy for a credit repair company, if it's just one simple price, all size fits all, or month to month, you're part of a prepackaged structure. A prepackaged structure doesn't necessarily favor you. Like I said, it can temporarily remove the negatives, but chances are if the creditors are catching up to this and they understand what the mistakes was, and they have a very strategic ongoing relationship with the credit bureaus, then they'll update that information properly and resubmit it to the bureaus, and it might be even harder and more complicated to get rid of those items, right? So you got to know exactly what to do. So those are the mechanisms of how to understand credit repair the proper way. If you don't get this concept, right, if you don't get involved in understanding this the proper way, chances are that you're probably not going to be successful in credit repair. So again, think about a liquidation analysis. From that perspective, think about exactly what the steps are going to be. Have a double process goal, have a simultaneous goal for A, removing negatives, and B, harvesting and establishing and seasoning new accounts or existing ones that you can work with creditors very strategically, depending on the liquidation analysis of how much income and expenses you're going through. From that perspective, move on to your financial goals. That's how credit repair should be. It should never be a one-size-fits-all structure. It should never be only about removing negative items or adding AUs for that matter. Because if you add AUs, it's temporary. Removing negatives is also temporary. It doesn't really help you. And it's not that removing negatives is going to be temporary if you do it right, but you haven't really established more than that, right? You just got rid of a baseline garbage. You still have a foundation that hasn't been built yet. You have to focus on those elements to make your credit repair journey worth your while, for anything to come out of it that's going to be successful. For you to have a long-term strategy that you can bank on, just so you can get a lot more funding and achieve your financial goals altogether from that perspective. So I hope this video gave you some insights on the pricing strategies of credit repair companies and why they price a certain way, and what is the mechanics or mechanism behind the pricing and how they work, and the flaws in their pricing strategy. And hopefully this gives you some insights on how to go about approaching credit repair companies in the future. And if you're looking to advance your knowledge, like I said, go ahead and check out the Ultimate Personal Credit Mastery. There's the Insider's Edition once you're ready. If you wanted to be part of a credit repair company, if you wanted to start one, or perhaps you just want to learn on your own, take this knowledge and apply it for yourself, and establish solid financial parameters around personal credit, and establish wealth using credit the proper way, obviously, go ahead and check out the Ultimate Personal Credit Mastery. The 4.0 is going to be coming out in the next couple of weeks, very shortly here. Definitely got some good updates for you guys. But with that said, if you enjoyed the video, don't forget to destroy that thumbs up button. Don't forget to share the video with those that you feel can benefit from the message I shared with you guys today. It'll help the channel out. It'll help me out greatly. I sincerely appreciate you guys. And if you haven't subscribed yet and you've been watching me for some time, I strongly encourage you to go ahead and do so that every time videos like these come out, you guys will be the first to know, the first to comment, and hopefully we can communicate with each other through the comment section of this video. And if you're interested, like I said, for furthering your credit knowledge, check out my courses, prominentwealthgroup.com. And with that said, this is definitely your guide and mentor, Ali Tarafdar. I'll catch you guys in the next video. Bye for now.